FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, if you've been watching gold and silver, it looks like perhaps the consolidation period might be over. We might be heading into that seasonally strong Q4 where the Indian dowries are paid, where the Chinese are buying up for the Lunar New Year. All these things might be happening. Meantime, markets around the globe are, well, they're kind of trendless, but maybe gold will be the first market to take off. Well, what's your opinion? We're going to have a contest. I want you to guess the price of the yellow metal by the end of the year, December 31st, but you'll be getting more details on our contest. In the meantime, we've got the gold and oil guy. Yes, I'm talking about Chris Vermeulen. We've been talking to you for years now, Chris. You've been pretty spot on about these markets, usually almost always in the short term, but longer term as well. And now we're seeing gold. Hey, gold is over $1,500 yet again, and silver has broken the $18 mark. What is the significance?
Hey, Gary. Looking at gold, I mean, we've got some price action going on this week that's starting to get people pretty excited, and including myself. If you look at the price of gold on the daily chart, it's breaking out of a falling trend line. If you were to connect the recent highs from August to now, they create this falling trend line where price has broken out of today. It is Friday, October 25th, and we had a big gap open on the metals. And this is the first breakout of this trend line, and it is exciting. It does come with a few little things to worry about, which is it's a crystal clear trend line that everyone has been following. And same with silver and gold miners. They all have very similar trend lines, and the markets for each of those are breaking through that trend line today. And we've saw a huge gap up. And the only thing that gets me is gaps tend to get filled. So when we gap up really big, like we did in gold, we usually see those gaps sell back down. It's called fading the gap. More or less, it fades back down to fill the gap, and then the market can try and grab some stability after that. And it's the first sign that the momentum is shifting from a consolidation phase to a potential uptrend. And we just need to see where it's going to shake out over the next little bit. But overall, this is the first sign that the trend is turning up. There is strength. We're starting to break some resistance areas. It's starting to get pretty exciting because the consolidation we've seen across the board for gold, miners, and silver has been a multi-month consolidation in a bull market, and the next run should be a fairly significant move. I could see another $150, maybe even a $200 move in gold to the upside here.
Really? And that much, you're thinking, huh?
Well, I mean, if you look at the from the May lows to this big bull flag that we've formed, the bull flags tend to form the halfway point. So, I mean, that went from, you could argue, say 1280 all the way to 1540, 1550. I mean, 200 is, in terms of that pattern, is a very conservative pattern. And I mean, there's a lot of upside potential for gold based on the volume and the price pattern that is formed. So I am bullish on it. Today might be a little bit of a fake out. It still might have some more work to do before it really starts to start trending higher. But overall, this is the first sign that things are starting to shift for the bull side.
Hey, and that is such a great point there, that it's breaking out, but this could be a head fake. But even if it doesn't happen now, it looks pretty clear that it's the fourth quarter is going to reassert the seasonality of gold. I mean, look at the run up we had in the summer when the seasonality was determined. It's always negative in the summer. That's always the worst time for metals. So, and one other pattern that I've seen that was a pattern 8-9 years ago when I first really got into the space was the 130 COMEX close, that the price would be knocked down, and then 130 would come along, or 135, and then all of a sudden it would shoot back up and recover its losses from earlier in the day. We're seeing that kind of pattern again. Also, we're seeing upside reversals happen often where the access market, the overnight market, you'll see it take a $3-4 hit and then open on the COMEX and recover that loss and turn green, turn black. And that's another thing. So it looks like we're going back to the future, right?
Yeah, yeah. I haven't looked at it in a while, but I used to do a lot of day trading with gold. And if you go to kitco.com and you do their spot gold chart, the one that's got three colors, I think it's like a baby blue, a green, and a red or something. And it shows the 3 different days of gold, how it's moved over the last 3 days. And you'll see clearly what you're talking about, where the market will pop or drop at the same times each day. And I usually find if 2 days are back to back the same, I'm usually looking to try and trade the third one for some day trade moves using the previous day's tops and bottoms to buy and to get short or to get out of position. So it's pretty interesting how the price action moves in gold is for sure, manipulated around during the different time frames as money shifting from opening prices and closing prices on different markets. So it's interesting for sure.
Hey, so what about gold vis-a-vis the US dollar? US dollar has been strong, and so has gold. I've always heard people say, like Peter Schiff and others, I've heard Martin Armstrong say it, that eventually gold and the dollar would move in the same direction at the same time. That's the other trend that I find really encouraging here.
Yeah, it just goes to show that scared money is moving into what they feel is the safe haven, and the US dollar is kind of seen as a safe haven in terms of other currencies. If you look at all the other currencies, other than recently with the Brexit starting to look like it's going to pass and get and all that done, all those other currencies have been selling off in huge percentage amounts. And so why would you want to hold these currencies where you're losing that much percentage on a monthly basis, just month after month after month? You might as well move into a currency that's appreciating or move into gold. And a lot of people are doing both. And that's why I think we're seeing them both go. Nobody wants to hold their own currency other than the dollar because they're losing value. So they're diversifying into the dollar and into metals. And we're seeing them both go up together because I think there's probably a big chunk of people in the camp in terms of, well, the US dollar is a safe haven, but it is a fiat currency, and it is, you could argue it's not a real currency. There's nothing to back it. So there's going to be people on the other side saying, okay, well, I'll put a bunch of money in the dollar, and I'm going to put a bunch of money in gold, and then I'm kind of, well balanced in terms of the two kind of real safe havens or safe havens for the market. So I think it's a good sign. I mean, we'll see where things go. The dollar is trying to move higher here. It's had a nice pullback. I still think the dollar is going to continue to perform fairly well, but when it does reverse, it's been on this huge tear all year to the upside. When it actually does start to break down below the 200-day moving average and some key support levels, that could be a huge mover for gold. It really could skyrocket things. And I mean, you look at just how gold moved this summer, there's going to be a lot of seasonality stuff may not come into play. I think things are really starting to get out of whack. Just like last year, the stock market crashed, October to December. That is not the norm by any means, especially that percentage amount. And gold had a massive rally this summer when it typically doesn't. And for all we know, we could be setting up for something very similar. The stock market is testing the highs, and gold has been consolidating and starting to show signs that it's ready for a big leg up. If it's going to have a big leg up, that most likely means money's going to be pouring out of another asset class, which could be another big sell-off in the stock market. And we've seen this over and over again. I mean, a couple of years ago, we saw that big flash crash more or less in August for the stock market. And that was not to be expected. I mean, that's not the norm during one of the quietest trading seasons. Yeah. So things aren't happening like they used to. And it's definitely, you've got to be on your toes because when trends shift, they can move very quickly. And you really want to try and get in as early as you can once you've identified the new trend is in place.
Hey, that's such a great point. Hey, one other trend, though, is that it's conceivable that the dollar could keep going up, gold could go up, and the stock market could go up as well with all of this freshly printed money. I know you're not big on fundamentals, but we do have, I would say none dare call it QE4 or QE4 by any name. we're really getting that now, and we see the repo market breaking down. So I just point to the fundamentals, only that, hey, look, the fundamental case for precious metals has been there since 2000, but for the last 8 years, the technical case has not been there. And I think what you're saying is the technical case is turning around.
Yeah.
So, hey, but oil is like really not doing too well. It's showing a lot of weakness. The upsides, usually are brought on by short-lived events like the attack on Saudi oil facilities. But then it looks like the VIX, the way it behaves. There's a catalytic event, makes it pop, and then it just goes right back down to resistance, in the mid to low 50s.
FSN Radio. It's all about what's next.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. The company is focused on its Candelaria mine project in Nevada, where there is already a historic resource estimated at 127 million ounces of silver. The Candelaria mine historically was the highest grade silver producer in Nevada, generating over 68 million ounces of silver at an amazing average production rate of over 1,250 grams per ton. The project has tremendous expansion potential as past drilling has outlined deeper, high-grade silver targets for future drill programs. Silver One is highly leveraged to the price of silver and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
The Financial Survival Network. It's all about what's next.
Yeah, I don't like crude oil. I haven't really liked it since more or less August. It just started to get kind of gnarly the way the price action was moving, and it was stuck in a range from the June lows to the July highs. And the news, obviously that news that hit the market, huge pop in oil prices, but it gapped open like 13% into resistance, like major resistance going way back on the charts, multiple levels. And I mean, news-based pops tend to always get faded. It's usually just a blip on the chart, and then price will fade back down, and gaps in general usually fill. I mean, there's just a big selling going on in crude. And I mean, we've had a nice pop this week in oil, but really it's right into the 200-day. It's right into a whole bunch of resistance over the last several months. And I don't really like the chart. I don't really have any real clear direction on it. It's really just drifting and popping and dropping all around since really August. So overall, I'm not a fan of trading it. And until I have any clear direction, I'm just not excited about a commodity or any setup. As soon as I see something that looks tradable, that's when I get excited. And I just don't see that right now in crude.
Yeah, totally not. Interest rates, you think they're going to allow them to ever go up again?
I don't know. Yeah, who knows? I mean, it'll be interesting. It's going to be interesting to see what happens, if the stock market or when the stock market starts to correct. I mean, who knows? Eventually it will. The question is, where will the top be? But how quickly will they be cutting rates? How low will they go? And I mean, I just don't think America can really take higher rates. I mean, everybody always borrows just a bit more than they can really afford. And so if rates start to go up, it's going to create a real major issue. And I think they know that. So I don't really see rates going up, but I think they'll be pretty stagnant for quite some time. But you never know. I mean, the market has this way of doing what no one expects, right? And that's why I like to follow trends and technical analysis, because who knows why something's going to rally or sell off and defy everyone's logic. I mean, but if you follow price, you may not get in right at the bottom or out at the top. But once you identify, hey, I don't know why the heck it's rallying, but it's in rally mode. Let's just, let's get into the market. That's the nice thing about technical analysis. You don't really need to know what's going on. You just need to be able to understand the trends and the momentum and just follow the trends, and you'll eventually get out when it reverses. And that's what makes my trading and so much more easy. I don't need to learn about the fundamentals or any of that stuff. I can just focus on the price.
Yeah. And then, look, price is everything. when you get down to it. All the other factors in a real free market economy, even a not so free market economy, they all pale in comparison to the price, because the price sums up, going back to the Austrian economist perspective, price is the indicator of all the supply issues, psychological, meddling by the government, manipulation, all these things. So as long as you have a free price, everything else will be discounted.
Exactly. And reality, how are you supposed to trade news and be a news? I mean, unless you're like a high frequency and day trader to catch quick moves, but news is random. You never know when something's going to hit, when a missile is going to hit something, or when some company, you just never know news. It is random. And unless you're like a day trader to try and just take advantage of short-term fear and greed and panic, I mean, it's just, there's no point in trying to trade that stuff, in my opinion, not for a swing trading and longer term positions, because news is blips on the chart and it's unpredictable. And you really got to be sitting on the edge of your seat waiting for some news to hit that may never hit for weeks or months. And then you got to react real quick. And then you got to try and guess what people are going to think about it. I mean, that's just why I don't follow the fundamental in news. It's just, prices, everything's already factored in. And if it's surprise news that no one expected, you're going to get a gap up or down, and gaps tend to just kind of fade whichever way it gaps over the next couple of days. It's just the way trading price action moves.
Yeah. And price is the ultimate indicator, right?
Yeah.
Like when there's not enough.
I agree.
And not all markets are free to move, but eventually I kind of believe that the market does right itself, that the fundamentals of the market really do prevail. Could take a long time to do it, but
for sure, yeah.
Eventually.
Well, things get propped up, right? I mean, like, it feels as though the equities market, I mean, there's just so much support there. It's like they're trying to just keep the stock market afloat and the economy afloat, and eventually they're not going to be able to. And unfortunately, the longer they push something, the higher it is and the harder it's going to fall. So it's just the way it goes. But this is history. This happens over and over again. Everyone tries to keep things all pretty and nice, but eventually things get exhausted, and no matter what you do, you can't save something, and it has to correct. So that's just the market cycle.
Yeah, it is. It's kind of like, hey, when you're raising kids, so many of my friends just try to shield them or insulate them from any bad things in their lives, any challenges, any negative situations. But eventually the kid's going to be on their own, and they're going to have to deal with it. And the amount of manipulation, meddling, it can't go on forever. Eventually this child is going to break out and be on its own.
Yeah.
Well, anyways, so any other markets we need to be paying attention to here, Chris?
I really think the big things is the SP 500. Which way is it going to break out of this big kind of pennant consolidation, this wedge formation? If it breaks to the upside, it technically has a ton of power and could have a huge rally to the upside, which would send precious metals for a reversal and to sell back down. And today's head fake would definitely be a head fake, and we see a big sell-off. We've seen this happen in silver. Go look at the last two times silver popped. I mean, silver had these massive rallies, bigger than today, and the very next day they rolled over, sold off hard, and sold down for a week straight to make new multi-month lows. So that is why I'm hesitant about gold today. It gapped up. It's starting to fade down. It was clear as day. I mean, it was such an easy-looking breakout. Everyone's on it, which is why price gapped. Everybody got in at the gap high today, and the market's just putting them all under pressure, probably going to keep putting them under pressure until they get shaken out, and maybe we see new lows over the next couple of weeks. But I have cycles over the next couple of weeks bottoming, which could be very significant. And it's going to be interesting. Whichever way the stock market goes is going to be the opposite for the precious metals sector. And I look at the SP 500 as the ultimate gauge, the ultimate tide. And whatever the SP 500 does, I'm pretty much looking at somewhat of the opposite, more or less, for the precious metals in terms of direction. So that's those are the two main things I'm looking at. And everything is in limbo right now, waiting for a breakout. And which way are we going to go? And today could be a big head fake in gold. I still think gold's going to break higher later, but just short-term basis, not yet, maybe.
All right. Well, hey, we're just going to have to see what happens. We've also got Fed open market meeting coming up next week or this week, and it's going to really, obviously, there's going to be movement in the metals. There always is, right?
Yep, for sure. It'll be interesting.
All right. Well, hey, it's good to catch up with you. We will be in touch and want to get your views in the aftermath. But and I'm looking at Q4 being a very positive one for metals. Maybe we'll see some moves in some other commodities too. The food situation kind of been underplayed. We had early snows in the U.S., in the Midwest, in the upper Midwest, where a lot of our grains are produced. There's a lot of things at play here, but one thing's for sure, it's not going to be boring, Chris. That's for sure.
Yeah, I think you're right. It's going to be a big fourth quarter here for commodities and some big market moves, I think. So everybody better buckle up. And the markets aren't probably going to do what you expect. It's just the way they move with the general masses. So it's going to be good. It's going to be great. It's just be aware that it might not go in the direction you think. So we'll see.
Yeah, it very well might not. And anyways, hey, where's the best place to find you these days?
You can find me at thetechnicaltraders.com, and that's where I provide my insight. I do a daily video on the markets. I cover gold, metals, silver, the dollar, bonds, SP 500, and the energies as well. And I kind of talk about what's been happening, where price is going, what to expect today, and if we're in any positions, what we should expect in those positions, and if we're looking to take profits or move our stops. And really, I just kind of take everyone for the ride. I follow and trade the markets, and I just kind of share what I'm doing. So it's pretty straightforward. And yeah.
All right. Hey, any questions or comments and your opinion about gold? Email address is kl@kerrylutz.com. The Twitter feed's @kerrylutz. Don't hesitate to put it up there. And the Facebook page, Financial Survival Network. Our website, financialsurvivalnetwork.com. Chris, always a pleasure. Thanks so much for coming on.
Hey, thanks, Kerry. Always a pleasure.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.